Alrighty, guys, welcome to our free weekly Outlook webinar. Thank you guys for joining us today. Today is Sunday, June 17th, 2018. Thanks for being here with us. If you are watching the recording, thank you for watching this as well. I want to introduce you guys to this webinar. If this is your guys' first time on one of these Outlooks, my name is David Schinkel. I'm the CEO and founder of Positive Traders. Positive Traders have been around since the middle of 2016 to give you guys an idea of how long I've been doing this. And before that, I've been in Forex for about 2 years before that, before I launched Positive Traders. So I do these weekly outlooks every single Sunday for free for you guys, just to give you an outlook and a bias. And with that being said, just want to give you guys a little disclaimer that it is just my bias. It's my opinion. Generally, I'm pretty accurate though, but don't be just taking trades because I gave a bias. Only be using your own analysis and your own intuition and own ideas before placing trades. Let this just kind of help you do some analysis, or maybe like be a handicap to breaking down the analysis. So before we get into things, guys, there has been a big announcement. Most of you guys saw it inside of Telegram, or if you follow me on Facebook, but I just want to make it formal on these webinars also that I am starting a free trade copier beginning tomorrow for the public. So it's just that. It's completely free. There's no strings attached. The catch, I guess you could say, quote unquote catch, is there is going to be a profit share with this trade copier. So any account that is connected, any profits that are made on that account, the profits will be split 35-65. So I'll keep 35% of the profit and you'll keep the other 65%. So that is the quote unquote payment for being in there, but it's not even like a payment, right? You're making money off of, you're able to leverage my trading, and I'm able to leverage profit sharing. So you win, I win, you profit, I profit, and it makes it worth my time, but it's also free for you. So that's the beauty of profit sharing. So there's more details inside of Telegram. If you're listening to this recording and you're wanting to get connected to the free trade copier, there will be a link down below in the description that you can click on. And that's going to bring you over to FX Choice, which is you'll be able to follow through with the steps. Very simple, takes like 5 minutes, and then you set up your account, you fund it. If you don't have an account with FX Choice, you just get it verified quickly. You just have to upload a picture of your photo ID and that type of thing too, so they know who you say you are, who you say you are. It's part of the anti-money laundering, pretty standard procedures, verifying a account, and then from there you're able to fund your account. And let it just be known, I think I've written this very clearly all over the place, but in case you are not aware with the details of how a trade copier works, which is the MAM account through FX Choice, which is how this is going to be set up, you still keep control of your money. So a lot of people think like I can go in and take everybody's money and run off. Absolutely not. I have no control. I have no access to anybody that invests. That's also one of the reasons why I'm able to do this type of thing, because I'm not having hundreds of people that are trusting me with their money. It's your own account, you have your own thing going on, and it's just simply connected to mine. So that's going to be following all the trades that I place. And if you are a current member of Positive Traders, nothing's changing for you guys. Of course, you still have the trade copier as always, which is 0% profit share. I don't take any of your profits or anything because you are a paying member. So if you are a paid member, this does not affect you. It may affect you if you have friends and family though. So tell your friends and family. And then of course, if you're a free member, this is definitely right up your alley. So that is for you guys. So if you have any questions, feel free to mention them. But let's get into everything for today. Let's get into the normal outlook. So very first, I want to look at the economic calendar. So I don't have time to go over every single individual piece of news this week. It is just know that it is one of those weeks that is loaded up with news. So we have everything. Tomorrow there's a bunch of news. Tuesday is a little bit lighter, but we still have Mario Draghi speaking. Wednesday, a ton of head speakers from all sorts of different central banks is going to be speaking. Thursday, there is an interest rate decision for the pound. And then to end off the week, Friday, there's some Canadian dollar news in the morning. And then also there's going to be some OPEC meetings. So that's going to, if you trade oil, that is definitely going to affect you. So that is the economic calendar for this week. Let me get into the bias. And let me start off by saying, guys, that my bias, I'm really happy, really proud that the past couple of weeks, my bias has been absolutely spot on. For those of you guys that have been following along and keeping up with these weekly outlooks, I think you guys have a very clear, you should have a very clear understanding of what's going on in the markets, being that I've been breaking it down and, you know, sharing my bias, and it's been really spot on and on each of these webinars. So to start off, you know, just to kind of recap, I said that I was still bullish on the dollar index, that we were going to go back up and retest our highs. That's exactly what we did last week. It took to the end of last week, but it did happen, and I am still bullish on the dollar while we're above the 93.2 level. And I've talked about this many times before, the 93.2 level. While we're back above this level, I will be bullish on the dollar. If we break back below 93.2, then I will be looking for opportunities to get back into a sell mode on the dollar. But as of right now, I am just looking for buys on the dollar. Yes. Yeah, Kevin, I did get the disclaimer in there. Thank you for watching my back. And gold, guys, I'm very happy with gold. The gold has been spot on. I've been mentioning for a few weeks now. We've been in some consolidation for a while. I mentioned these 3 different zones of consolidation. We were in for a few weeks, but I said ultimately, and I'm still bearish on gold, right? I'm not bearish on gold, but I've been mentioning the 1250 area. I've been mentioning targets, but specifically towards the end of last week, if you guys are in the Telegram, let me just pull it up so you guys can see. Let's just look at this, okay? So hold on, I'm just gonna quickly share this. We're gonna go new share, and we're gonna go into Telegram, and I just want to share with you guys why, like, the whole point of me sharing what I'm about to share with you guys is why you should just stick with one group, or maybe, you know, I'm sure there's maybe a handful of other groups out there that are transparent and they break things down. They teach the proper ways of trading like I do, but a majority of the groups out there are just noise, right? So you need to block out that noise and not get distracted by that noise, and just focus on, if you just really focus on and keep up with a couple groups, you don't have to be jumping and looking for a million signals or a million pairs. So this is emphasizing that. So this is back on the 14th. So this is towards the end of last week, but we still had the end of last week to go. So that was on, let's see my calendar, on Thursday. I said expecting gold to dip back below 1300 and head towards 1280. At the time of posting this, gold was above the 1300 level. We were like at like 1301, okay? And we can see, so that was on the 14th, so that was all the way up here. And we can see since then, price has gone down and it hit our target of 1280. So price has moved, you know, pretty much exactly what we wanted to happen. It stayed overall underneath this 1300 level, which is what we were expecting. So awesome job on this pair. And I'm still bearish, right? We definitely have this support trend line that we're coming up to. This has been on here for a very long time, but the next target, once we break that support, is going to be the next support trend line, just a little bit lower, around like the 1250, 1260 area, okay? EURUSD continues to move lower as well. I mentioned this last week as well. On last week's webinar, I mentioned downside. I've been bullish on the dollar and bearish on EURUSD for a while now, and we did get that downside. Obviously, a lot of this had to do with, all of this dollar strength has to do with what happened last week, which interest rates got hiked. So that's the second time this year that the interest rates have been raised in the U.S. by the Federal Reserve, and they are actually expected to also raise interest rates 2 more times this year. So this year there's 4 times that they're expected to raise interest rates, which is a lot. Because don't quote me on this, I'm not exactly 100% sure, but I believe interest rates have only been raised like 7 times in the past 11 years, something along the lines of that. So it's a pretty big deal when interest rates get raised. USD Swiss franc, we finally broke out of this channel, this descending consolidation channel, and I would expect more upside because of a nice break. Just expect more upside on this pair. We're gonna have more dollar strength. We're gonna have more Euro USD weakness and more strength on USD Swiss franc. Now, definitely USD Swiss franc can be a little bit tricky because it's around parity, right around the 1.0. So it could consolidate around this area before flying up. So I'm not super interested in that. Pound dollar. Pound dollar, I am bearish on. I mentioned that last week also, being bearish on pound dollar. I'm still expecting sells. This trend line is a trend line that I had pointed out back when price was all the way up here. I mentioned wait for a break of this trend line and then look for some sells. Obviously, we had a little bit of volatility, a little bit difficult to actually trade this pair, but the overall bias in direction was spot on. Pound yen, this is just a trade setup. This stop and open and target that you can see is just a trade setup that I gave out on one of the daily webinars last week for our members. But I'm bearish on pound dollar, obviously. I think pound yen. I think pound yen is definitely going to continue making moves to the downside, and I'd expect it to retest like the lows, like the 144, 143 area. I would expect to see, lots of downside on most pound pairs. Do be careful though with pound pairs because we do have that pound news on Thursday. Okay. So the interest rate decision on Thursday. That's going to definitely create some volatility. Dollar yen, right? We're seeing some strengthening with this pair because we're seeing a strengthening of the dollar. It makes a lot of sense. Overall, I'm still bearish on long-term bearish on dollar yen, right? Short-term, obviously, it's bullish. No real interested in trading this pair, but I'm interested at just looking at this support structure and seeing what happens if we stay kind of inside of this channel and continue rising, or if we break down and move lower. But I'm not super keen on this pair right now. AUDUSD, NZD, and NZDUSD are both moving spot on. Also, last week I predicted downside on this pair. That was my bias. And that's exactly what we saw, right? So overall, bias has been dollar strength, and that's what we've been seeing is dollar strength. So when you see AUD/USD go down, when you see NZD/USD go down, that is because the Australian dollar and the New Zealand dollar is weakening, and vice versa, the US dollar is strengthening. So same thing with NZD/USD. Very clean price action on this pair. Last week we talked about NZD/USD finding resistance right around this 50 EMA, and most likely we talked about with that dollar strength that it would see downside with the dollar strength, and AUD/USD following suit to the downside, and that's what we saw. So I wasn't too interested in trading this pair because of this major weekly support that this pair is sitting on. But it's, or actually, this could be weekly, yearly, however you want to call it. This is multi-year level of support. Because we were above that, I wasn't super keen on taking a sell. Another thing to look at, USDCAD. I'm really proud of this. So some of you guys that have been following me for a little bit, you'll know that 134 has been in the works, right? So this wave, this 1, 2, 3, 4, this Elliott wave setup that I have right here, this is not new. You go on last week's live webinar, or last week's weekly outlook, it was there. I believe it was even there it's been there. This is the third weekly outlook now, that maybe even the fourth weekly outlook now that this has been here. So you've had all this opportunity, to maybe be looking for opportunities to get into USDCAD. I'm still bullish, right? 134. I've explained it, broken it down on the webinars before. So if you're new here, you want to know why I've been bullish on USDCAD. I mean, even here, will we see 134? So let's see if it wants to load up for you guys really quickly. Here we go. So right here. So this was on May 27th. So this is 3 weeks ago, basically. 3 weeks ago, I posted this and expecting it to move towards 134. Now, this is just a trade setup at the time. We actually did place this trade also in the group. However, so we had placed it all the way back here. And then we had our stop loss. Once we were in a little bit of profit, we set our stop loss to break even, and then we got stopped out at break even. So a risk-free trade, didn't lose anything, didn't make anything. And because of the massive consolidation, we didn't get another opportunity to enter, but this is still a very valid trade idea. So USDCAD still moving to the upside. And finally, I just want to share with you guys, this is a trade that we placed last week in the premium group, and I'm very excited. If you guys are following my FX book for the current MAM, you guys will notice that in February we had a loss, a losing month, and I think our biggest losing month in 2 years. And this trade is going to make over double what we lost on that month. So this is a 1 to 17 risk to reward. We're aiming for about 1,000 pips, or about 850 pips on this trade. And we're looking for this 1,000 pip move down on CAD yen. And we're in some really nice profits right now. Okay. So it's past we're up 4% on this trade right now. It's running at 4%. We're up over 100 pips, about 106 pips right now. So we're aiming for 858 pips, stop loss of about 50 pips. So if you're interested in getting connected to the free trade copier, or and you want to know what kind of trades to expect, it's going to be trades, maybe not as crazy as this. These will happen once in a while. This is an insane risk to reward, right? You're risking, essentially, I'm risking 2% to make 35%, which is insane. In a good way, insane, but overall, the average risk to reward, we're looking at is like 1 to 2 or 1 to 3, 1 to 4, somewhere in that range. Okay, so just want to show you guys a open trade. That is big shout out and courtesy of Louis, also a co-founder of Positive Traders, for showing me CAD yen and recommending to look at the analysis on that pair. So it's nice having friends and being connected in a community where there's other real traders out there, not just fake marketers and stuff, people actually making money and doing a real analysis. So that's that, guys. I shared that if you missed the news at the very beginning about the free trade copier, watch the replay that I'll have on YouTube. You might be watching this replay on YouTube and have that info already, but other than that, guys, that's my bias for this week. So overall, still biased to the upside on the dollar. As far as setups go, I'm really just watching this CAD yen trade that we're in right now. And then I'm going to be looking for opportunities to still sell things like EURUSD, AUDNZD, NZD, but right now we're in the middle of a lot of big moves, right? It's pretty clear to see that we were in consolidation for a couple weeks leading up to last week. And then towards the end of last week, we started to really break out of that consolidation and started to make some moves on a lot of pairs. So some of the pairs like pound yen, for example, where we're still kind of in that consolidation, this is a pair that you might want to be looking for a trade on rather than a pair that has already, started the moves. So we'll leave it at that, guys. Have a great trading week. If you guys are a paid member, part of the premium group, I'll see you guys on tomorrow's live webinar. If you have any questions, feel free to reach out to me through social media. And other than that, guys, have a great week. Take care, guys.